2024 is going to be a kindergarten party compared to what happens in 2025. 2025, again, I believe there's going to be a failure to deliver. Once that happens, who knows where the prices can go? Forget about charts. I mean, forget about everything. You're gonna, when all is said and done, count your net worth in ounces. And because this is it's a Western credit problem, and when credit breaks, you're going to see institution after institution fail in domino fashion. And I think the great taking will definitely be in place before the end of 2025.
Bill Holter, a seasoned financial analyst and commentator, has consistently expressed concerns about an impending credit event and its profound implications for both the U.S. and global economies. He argues that the current financial system is precariously balanced on an unsustainable foundation of debt and credit, rendering it vulnerable to significant disruptions. Holter contends that the real economy fails to generate sufficient cash flow to support the expansive financial sector. This discrepancy has compelled central banks, notably the Federal Reserve, to inject substantial liquidity into the system through measures like quantitative easing. Such interventions, he believes, are merely temporary fixes that fail to address the underlying structural issues. He likens the financial system to a patient on life support, with central banks acting as the sustaining mechanism. A critical concern for Holter is the potential for a credit seizure, where the flow of credit within the economy grinds to a halt. Such a scenario could lead to the collapse of supply chains, as businesses rely heavily on credit for operations, inventory management, and payroll. A disruption in credit availability would impede these essential functions. The doom and gloom prediction he envisions could begin as soon as 2025. In a recent interview with Capital Cosm, Holter discusses the coming credit collapse, emphasizing the interconnectedness of credit and currency. He posits that currencies are forms of credit. Thus, a collapse in the credit system would inherently devalue currencies. This devaluation could lead to hyperinflation, eroding purchasing power, and destabilizing economies. Holter asserts that central banks face a dilemma: either continue to inflate the money supply to sustain the credit system, or allow a deflationary collapse, both of which carry severe consequences. To mitigate these risks, Holter advocates for the acquisition of physical assets, particularly gold and silver. He argues that these metals are intrinsic stores of value, free from the liabilities associated with fiat currencies and digital assets. In times of credit and currency crises, tangible assets like precious metals serve as reliable hedges against economic instability and the next resort for all categories of investors. We will now present clips from Holter's interview, but before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
I think it all comes to a head in 2025. I think 2025 is the year. And what bolsters that thought process is, I just posted this 3 or 4 days ago. The Bank of England announced that if they bail out any non-bank institutions, they're not going to say who they are. I mean, first off, why are they bailing out non-bank institutions? But if they're telling us they're not going to tell you who it is, that tells you 2025, because it begins January 1st, 2025. So it tells you this year they foresee something happening where they're not going to tell you who they're bailing out.
Why would they want to do that? What's the rationale behind it?
I don't know, not to not spill the beans on who's insolvent, so that they don't get put out of business. It did kind of surprise me, because the way I understand it, and I mean, just if you look at the great taking, there's not going to be bailouts, there's going to be bail-ins. So it very well may be that we have bail-ins of financial institutions, banks, and there may be bailouts of non-bank financial institutions. It's hard to say, but it's really curious that the Bank of England would come up with this as of January 1st, that they're not going to tell you who they're bailing out. And don't forget, I mean, go back to 2008. The Fed bailed out the world. They lent out, what, 16, 17 trillion dollars, and we didn't find out about that for 2 years. Well, it's that simple. The markets are rigged. I mean, they rig markets with derivatives. What they want to go up, they buy, and what they want to suppress, they sell. So, I mean, yeah, they're rigging equity markets higher. They're rigging. I mean, they're trying to provide a floor under the credit markets. And I've said all along that when this thing breaks, it will be the credit markets that break.
Right.
And what very well could break the credit markets, you're starting to see bigger and bigger demand deliveries for both silver and gold. And I believe there's going to be a failure to deliver. I think it'll start in silver. Gold will immediately go into the same manner of non-delivery, and that will break confidence. And what happens to a Ponzi scheme?
So what happens then if they can't get the capital?
Well, it's completely over. The Ponzi scheme collapses, interest rates shoot through the roof, the real economy stops because credit stops, and I mean you could. Every day you wake up, you're only 72 hours away from a Mad Max scenario.
Are you familiar?
And without credit, you're going to see Mad Max, because nothing, and I do mean nothing, runs without credit.
Would a credit event create this Mad Max scenario and elicit this mass, reduction of the population?
Yeah, I don't believe that there's an exodus coming at all. I think there's a die-off coming. And if you shut credit off, food becomes unavailable on pallets waiting to be shipped. Shipping will stop. Everything will stop. The average person has no food stored up. So within 30 days or 60 days, you're going to see an immediate blast of people dying just because they don't have food. And it may be that it takes 2 years, 3 years, 4 years for this to get through everyone's system, and you start to see even a higher turbocharged die-off. I mean, we're seeing cancers, we're seeing blood clots, we're seeing heart problems, and it's across the board. I mean, this is not just old people. I mean, you're seeing young athletes, 16, 17, professional athletes in their early mid-20s at the best shape of their lives, just falling down dead. So, is that part of it? Was that part of the original rationale? I would imagine it probably was. What will happen is you basically get a deflation in everything that you own and a hyperinflation of the things you need, like food. If there's no credit, all of a sudden, an apple or a dozen eggs is, if you can find it, $10, $20, $100, $2,000, who knows? But the stuff that you have is going to deflate. Your stocks, your retirement plan, your real estate, all of that's going to deflate, because if there's no credit that allows new buyers the ability to bid on those assets, the assets go with no bid and only offers, and they'll drive the prices, literally to being worthless. If there's no credit available, you're looking at assets being priced at pennies on the dollar. It's never happened on a grand scale, but certainly you've had governments that have been shut off from the credit markets, and what happens is their currencies hyperinflate. Look at Argentina. Look at Brazil. Look at Zimbabwe. Look at Russia in 1990. When countries are no longer able to borrow, then you get deflation of their assets, and the countries go into survival mode. The Weimar Republic was a different. That was different because it was done by basically, call it, printing alone. And back then, you had other currencies that were still tied to gold. There are no currencies anywhere on the planet tied to gold. And like I said in the past, I mean, when you looked at, the nations, Colombia, Venezuela, etc., there was always an alternative to those countries. Right now, I mean, the alternative is US dollars. Now, if this happens on a global scale, where is there to hide? What currency is there to hide in? There are none. There are only two monies, gold and silver, that you can hide in. And I mean, you're not going to be able to get gold or silver because once they fail to deliver, nobody's going to sell it for any currency of any amount until the system begins to reboot and we have currencies that are in fact, again, ratio backed by gold and silver.
Bill Holter underscores gold and silver as essential safeguards in an increasingly precarious financial world. Unlike fiat currencies or paper assets, these metals are free from counterparty risk, meaning their value remains unaffected by the solvency of institutions or government guarantees. This independence makes them particularly attractive during times of uncertainty, such as the period Holter predicts is imminent. He points to several alarming indicators, including the U.S. debt-to-GDP ratio at approximately 130%, a level that historically signals either extended economic stagnation or a potential fiscal crisis. The banking system also shows growing fragility, marked by declining profitability, rising exposure to bad debts, and significant risks tied to financial derivatives. Holter warns that a major credit event could trigger a cascading crisis, threatening the stability of the entire financial system. Additionally, the global economic landscape is fraught with excessive leverage, inflated asset valuations, and geopolitical tensions. These interconnected vulnerabilities magnify systemic risks, leaving banks and economies exposed to liquidity crises or widespread confidence collapses. For Holter, this precarious environment reinforces the case for gold and silver as secure and reliable assets in a world fraught with instability. Let's get back to the video.
Right, and along with the biggest debt problem, there's speculation. There's obviously speculation on the United States as to whether or not we hold the gold that we say we hold. There's speculation on other countries whether that their gold actually exists. I think there's very little speculation whether China or Russia or you could lump in India because they've been a big buyer. I mean, these countries, these central banks have been big buyers of gold now for 10, 15 years. And China has actually been grossly underreporting what they've bought. I mean, if you look at what has gone through Shanghai, and we know nothing's exported, so the gold goes into the country, but we know it never goes out. I mean, how many tons per year? You're looking at, 2,000, 3,000, 4,000 tons per year going in. It's not coming out. We also know that China produces 450 tons a year, which never comes out of the country. So the West has a debt problem. It's speculative as to whether or not they actually hold the gold reserves they say, but the BRICS nations absolutely hold more gold than they did last year, 5 years ago, 10 years ago. They've been building their gold reserves higher. And the old saying, he who has the gold makes the rules, that's going to come into effect in 2025. I think 2024 is going to be a kindergarten party compared to what happens in 2025. 2025, again, I believe there's going to be a failure to deliver. Once that happens, who knows where the prices can go. Forget about charts. You forget about everything. You're gonna, when all is said and done, count your net worth in ounces. And because this is it's a Western credit problem, and when credit breaks, you're going to see institution after institution fail in domino fashion. And I think the great taking will definitely be in place before the end of 2025. And like I said, People ask me, oh, well, give me a forecast. You can't forecast an Armageddon-like market, and you cannot do it mathematically either, because A, we don't know how much in dollar terms. A, we don't know how much gold the U.S. really has, and we don't know how much credit they're going to try to borrow, nor how much money supply they're going to print. So you don't have a numerator and you don't have a denominator. So you can't come up with a number. How much is each gold ounce worth that the U.S. government owns divided by the amount of credit that they owe? You can't do that math because you don't know the top or the bottom number for sure.
If I were China or Russia, what's stopping me from just adopting a gold standard and just crushing the dollar? Like, why are they? It seems like they're holding back a bit.
Simple. Yeah, they are absolutely holding back. Would you want to be the nation that blows up the entire Western financial system and literally start World War III? No, they don't have to do that. They can stand back and let us just die on our own. Let our bubbles blow up. Let us our own the harvest of what we've sown. So, I mean, there's no reason for them to push. They don't have to push. They don't even have to push a tiny, tiny bit to knock us over. The West is gonna collapse completely on its own, and they know this. It's math. They're smarter than I am. They're smarter than you are. They know this. If we know it, they know it. Where were we in 2019, the end of the year, just before COVID hit? We were
something
on the. Well, we had come up a little bit off of zero, but we were still pretty close to zero bound. I mean, if you looked at short-term treasuries, they were half a percentage point. So it's not going to make a difference, because by the end of 2029, we had a repo problem, and then all of a sudden, COVID came along and fixed it. COVID shut the real economy down. It lowered the demand for credit. It bailed them out, and it also allowed them to create trillions of dollars and spray those trillions all over the world like a fire hose. So that reflated. But here we are, back to where interest rates were, 2008, 2009, before that crash. If you look at a chart, you'll see that interest rates never rebounded higher than the previous high until now. Now we're back to the previous high, but that had never happened from 1982 until 2008. Every peak was lower than the previous one for the next cutting cycle, because they were blowing bubbles along the way. Bubbles would blow up, they'd lower interest rates, blow the bubbles up again. We're done with that. We've reached debt saturation worldwide. The difference between now and 2008 is that in 2008, there was still ability of sovereign treasuries and central banks to take on more debt. We've reached credit saturation, debt saturation. So there is sovereigns and central banks were the white knights in 2008. Who's the white knight now? Who's going to bail out the governments? Who's going to bail out the central banks? No one.
How do you prep for something like this? Go ahead.
Well, you need to prep with the mindset that you're going to be on your own, as in like no cell phone, no computer, and it doesn't matter who you're going to call. You're going to dial 911, nobody's going to answer. You need to figure you're going to do that for 2 or 3 months, 6 months, who knows? The other thing I was going to say is, the Federal Reserve knows that there's going to be reaction to what they say. These people are crazy, and I have said that, they could be so crazy that they nuke a city somewhere in the United States before January 20th. Would that stop something less severe, like pulling the rug on markets and no longer supporting anything and just let them crash. What would happen in that instance if you had banks failing and the banking system closed before January 20th? Would there be a handoff of power? I think that's where we are now, is you've got to look at what are the potentials or the possibilities of something happening where the transfer of power does not happen, because that's what those in power now are striving for.
Going back on the prepping side of things, if or when this thing starts to transpire and unwind, more specifically, right, we shouldn't anticipate any 911 calls or the usual public services that we become accustomed to. If you had like a broad checklist, like what should be the game plan of an average person?
Make sure you have enough food for, I'm going to say, a minimum 3 to 6 months, preferably much, much longer. I mean, you need to be able to have a source of clean water. Without water, you're going to die. You need an energy source. People up north in the northern hemisphere.
Several macro and financial analysts and experts in other fields have expressed concerns that President-elect Donald Trump's inauguration on January 20th, 2025, will not be allowed to hold. These experts have pointed at the many unnecessary moves the Joe Biden administration is making so close to the end of the present tenure, particularly the moves that threaten global geopolitical stability. Then, we have the issue of the yet-to-be-identified drones flying unchallenged near U.S. military bases, fueling concerns about national security and airspace integrity. Holter and others believe there is a strong connection between these occurrences and the deep state and their plans for complete global domination. Do you agree with these predictions? Please share your thoughts in the comments below, and don't forget to like this video, subscribe to the channel, and turn on post notifications for similar updates. Thanks for watching, and see you in the next one.